Investing in dividend growth ETFs is maybe the greatest strategy of all time. Now, when it comes to dividend growth investing, there's so many stocks and so many ETFs that fit the bill for what investors could look for. But in this video, we're going to go through and put SCHD and VYM head to head and explain which ETF might be a better option for retirement. One of the greatest strategies to a financially free retirement is definitely through dividend growth investing. Now, this is because it addresses a number of issues that retirees frequently face. By living off of the income from the dividends, retirees can enjoy their time finally not working. Now, by living off of the passive income from the dividends, retirees can sleep well at night during bear markets and knowing that they don't have to sell off their shares in order to cover bills and in order to continue to live their life. Now, given that growing dividends are typically very dependable, as the saying goes, the safest dividend is the one that has just been raised. Retirees that are investing into things like SCHD and VYM can sleep well at night knowing that either one of these ETFs are going to be a great option. Now, for those that implement dividend growth investing early on, can also benefit from the long-term compounding, in addition to generating significant current passive income to fund a lifestyle, and generating sufficient income growth to keep up with inflation. Over the long term, dividend growth stocks, dividend growth ETFs are a great option. And this is because over time, with something like SCHD and something like VYM, the dividends are going to be increased as inflation goes up and as possible living expenses also go up. You can almost guarantee that the ETF's dividends will rise with it. So let's quickly back up for a second. If you don't already know, SCHD is an acronym for the Schwab US Dividend Equity ETF, which is an exchange-traded fund that invests in high-quality dividend-paying U.S. stocks. The fund is managed by Charles Schwab Investment Management Group and seeks to track the performance of the Dow Jones U.S. Dividend 100 Index. Now, the Dow Jones U.S. Dividend 100 Index is a subset of the Dow Jones U.S. Total Stock Market Index, which includes the top 100 U.S. companies with a strong track record of consistent dividend payments, and on top of that, also a history of increasing their dividends over time, which is my personal favorite part of these names. The SCHD ETF invests in these companies, which are spread across various sectors of the economy, including healthcare, consumer goods, technology, and financials. Now, the first reason why I think SCHD is a superior investment to pretty much any single stock or any other dividend ETFs is because of the starting dividend yield. SCHD gives dividend investors a good starting dividend yield, which can allow the dividend investors to expect nice sized dividends pretty much from the start. And in general, when it comes to dividend growth investing, which is invested into dividend paying stocks that have a potential to grow in the future, it's really tough to find other ETFs and single stocks that have the same quality as SCHD and that also start with a well above 3% starting dividend yield. Now that we looked into SCHD, let's look a little bit deeper into VYM. So VYM, or Vanguard High Dividend Yield ETF, is an exchange-traded fund launched and managed by the Vanguard Group. This ETF invests in public equity markets of the United States. The fund invests in stocks of companies operating across diversified sectors. The fund invests in growth and value stocks of companies across diversified market capitalization. The ETF invests in dividend-paying stocks of companies. And the fund seeks to track the performance of the FTSE High Dividend Yield Index. Now, VYM is a well-diversified portfolio, with 19.18% being financials, 15.05% being consumer defensive, healthcare being 14%, industrials at 11%, energy at almost 11%, technology at 8.5%, utilities at 7%, consumer cyclical at 6.9%, communication at 3.8%, base material at 2%, and a tiny bit of real estate. Now, VYM is made up of 469 different companies, which means obviously the fund is very well diversified. So for the investors out there that want a small piece of a lot of different high-quality dividend-paying companies, VYM could be a good option. VYM's top 10 holdings are very familiar. We have ExxonMobil at the top, we have Johnson & Johnson, JP Morgan, Procter & Gamble, Chevron, the Home Depot, Merck, abbvie, Pepsi, and Coca-Cola. Now, these top 10 holdings have a long-standing history of decent performance overall, and of course a history of paying dividends consistently and raising them over time. Now, another great thing that VYM offers is the very cheap expense ratio. Now, this ETF is a quarterly paying ETF, and as you can see, since the fund's inception, the dividends have fluctuated, but overall they have been moving up over time consistently. For some reference, back in 2006, VYM was offering around 18 cents per quarter per share. And just as of March, the last dividend declared was up to 72 cents per quarter. So for the investors out there that take dividend growth very seriously, VYM definitely crosses that off. Now, if you've made it to this far into the video, this is the part about VYM that I don't think a lot of dividend investors realize. We touched on VYM's dividend growth a little bit earlier, and we also talked about how we do have a good amount of historical data to go off of. So VYM's dividend growth rate, so how fast the dividend has grown over the last 3 years, has been 4.88%. So to be honest, that's not all that great of a dividend growth rate on the 3-year time frame, which shows that because of VYM's holdings and or for whatever reason, the dividend growth has slowed down as of recently. But if we zoom out on the 5-year growth rate, we're up to 6.33%, which is getting up there. If you look at the 10-year dividend growth rate, VYM is at 8.83%. Now this is more along the lines of what you'd expect from a fund that's built out like this. But what's interesting is that on the 20-year time frame for the dividend growth for VYM, the dividend growth rate is at 13.96%, which that is definitely a pretty good dividend growth rate. So what does this exactly mean for VYM, and why is this important for investors to realize? Well, if you look historically at how VYM has performed and exactly how much in dividends is paid out every single year since inception, there's been some years where the dividend payouts have been higher and lower. But if we were to project and assume that VYM moving forward here is going to have a dividend growth rate of around 8.67%, which is somewhere in the average of what it's done so far, VYM is projected to pay $3.53 per share in 2023, $3.84 per share in 2024. In 2025, VYM could pay $4.17 per share. In 2026, VYM could pay $4.53. In 2027, VYM could pay $4.92 per share. 2028, $5.35. 2029, $5.81. And by 2030, VYM could be paying over $6.30 per share. So now that we went over all that, which is the better fund to buy? Now, both funds obviously are attractive investments, and if a young investor was looking to invest into either one of them, I would say most likely by retirement time, they're going to be looking quite good. But that being said, when it comes to current yield and track record and holdings, I will personally say that SCHD comes out ahead of VYM. And this is likely because of its concentration into investments that are going to have a little bit faster growth. But of course, like I always say, for the diversified investor out there that can't just choose one, in my opinion, SCHD and VYM are both definitely worth looking into. If you enjoyed this video, make sure to please drop a like in the video and subscribe for more. Thanks as always, guys, and I'll see you in the next one.